Ollie, thank you so much for kicking us off. Donna, thank you for joining me this morning. Everybody, welcome. So I think this whole conversation about pandemic now seems to be old news. We are now entering a new world where we're already, as companies, starting to plan what lies ahead in the months and the years to come. It may be easy to forget, but pre-pandemic, about 75% of an airline's profits actually came from business travel. And pre-pandemic, we also, in addition to these road warriors that we had on the road, we also had majority of the people who are still working out of the office. About 95% of the people used to work out of the office, and you'd have 5% of people who are on the road. Now, going forward, what is to come? Are we going to see that same 5% folks on the road? Are we going to have 95% people back in the office? Most predictions suggest that about 20 to 30% of employees would like to continue working remotely full time. Also, that a majority of folks, about 40% of the remaining of the folks, would like to work 2 to 3 days in the office in a week. And so what will all of this mean? Will this mean that salespeople will now just be working off their home office and not be visiting their clients anymore? Or will this mean that senior executives will just be monitoring all their employees remotely and not be visiting the different offices? And it is for those insights that I have Donna here. She is a senior executive at BCD. BCD is one of the largest travel agencies in the world. And obviously BCD gets to see up close and personal what's in the world of business travel and how it's coming back. Donna, thank you for joining me today.
Yeah, thank you. Thank you, Nishant. I'm definitely looking forward to the discussion. I'm very excited to see that my heart and soul business travel is on the comeback. You know, back in March of 2020, we all felt the panic, but now companies are getting ahead of things and we're planning for the longer term. Our research team conducted multiple surveys throughout the pandemic, and this slide is specific to feedback from travelers, which we obtained in December and again in February and will again next month. And here we asked them about their path back to safe travel and what they needed to get back on the road. 83% said at that time they would be traveling by year end of 2021, mainly the second half of 2021, citing that the vaccine pace and easing of national lockdowns were the key drivers. Since we're seeing both of these, it's no surprise that we've seen a quick jump in domestic travel. But traveling during the pandemic has gotten more complicated. There are a lot of new considerations throughout the traveler's journey. You can go to the next slide. I'm not going to walk through this slide, but you can see there's a lot to think about. So before you start your trip, where am I leaving from? Where am I going to? What is required? Are there any new processes or policies that my company has put in place? We saw a huge uptake in new approval processes being implemented, virtual collaboration guidelines. I think we've all shown that we can work from home, Nishant, to your point earlier. So as people get back out on the road, there's new policies that are in place for that. During the trip, there's extended wait times, supply chain shortages. So do your travelers even know what to expect at the airport or when they pick up their car or when they get to the hotel? Will they need to provide a negative COVID test upon return? And then when they return, do they need to quarantine or even check in with the department within your organization? A lot of companies put protocols in place to check in with HR or check in with health and wellness when you return. And it's a lot. And when you couple that with the fact that most people haven't been on a business trip in over a year, you realize how important it is to be communicating with your travelers to make sure that they feel safe and prepared and informed as they get back out on the road. So at BCD, we went ahead and tackled this a couple of different ways. We created our COVID Information Hub, which is basically a website that allows you to access really assess your country entry requirements. So where are you leaving from? Where are you going to? All the what you need to know information, different airport and supplier policies. And then the second part of that was our Back to Travel Guide, which is a digital playbook that we rolled out back in May of last year and then have kept it updated regularly. You can go to the next slide. Get off of that I thing. So our Back to Travel guide it's a multitude of information. It has everything from infographics to checklists to traveler need to know material. And really the framework for the whole guide is built around the 4 elements that you see there. So from a duty of care perspective, travelers and their companies agree duty of care is #1 priority. We heard that time and time again in the different surveys that our team held. As travel recovers, the decision to take a trip has to consider not only cost, but traveler wellness and risk mitigation. And we've recommended a multi-pronged approach within companies to partner not only with travel and security, but HR and sustainability teams so that you have an overall strategy that ensures that your company is providing your employees with the tools and resources they need before they travel, during their trip, and then of course after. And then a second component of the Back to Travel guide is traveler communications. I mentioned it earlier that preparation and planning is the key to confidence. And we're encouraging pre-trip communication, which includes mobile reminders, travel tips, and checklists for extra peace of mind. And while they're en route, a communication plan that delivers real-time risk alerts, relevant policy notifications, and one-click support. The third component is spend management. And boy, our customers have so much more to consider than they did last year. How should you source your suppliers? What volumes do you use? I think one thing that hasn't changed is the importance of making sure that a company is paying their fair and appropriate amount relative to market conditions and travel spend. And throughout the pandemic, we saw a lot of behavioral shifts. Advanced purchase windows shrunk. Purchase of refundable tickets increased. And all of this will need to be addressed at some point so that your travelers get back to following the policy that has been in place for them. And then the fourth component, of course, is policy. And ensuring that your travel policy is fit for purpose is the critical first step. When it's time to travel, you need your employees to know what's allowed, when to book, who to book, and most importantly, why. And compliance is key, whether this is to preferred suppliers, to your policy, or to your processes. So Nishant, I'm going to hand it back over to you to talk more about this.
Thank you, Donna. That was a great overview. Thanks for sharing. I think you left off on an important piece, which is around compliance. I know we have a number of folks here that comes from tax and payroll and mobility in addition to travel. So I think that's one thing that I get asked a lot about is how has the compliance landscape, how is that going to evolve? I've been doing business travel compliance for about 10 years. I think the big four have been talking about this forever. But I think a lot of times business travel compliance has not received as much attention because, to my earlier point, the number of people who are on the road or were not where you expected them to be in your home office, in their primary work location, the number of those folks was far and few between. There are only 5% of people, as I said, on average, who are not where you expected them to be. And so it was easy for companies to be able to take a risk on that 5%. I think come the pandemic, the number of people we're going to see across borders, whether it is as a result of business travel or whether it is a result of remote work or distributed work or any other form of working arrangement that companies may come up with, that is going to result in more people across borders, which means that you're going to have several different compliance implications to think of as an organization. So it's easy for Jack Dorsey to go out there and say, hey, anybody can work anywhere. I am pretty sure that he did not go down and talk to the tax folks and the payroll folks and the mobility folks to really ask the question of what does it mean. I find a lot of companies really struggling with this, really struggling with how to come up with policies. There are no best practices. You will see this from, even a company like Google that first put out, hey, there will be no flexible work at all. And then going back to, we'll have some flexible work, right? So even some of the largest, most well-equipped companies are having a hard time trying to figure out what it will mean. But one thing is for certain that you will have more folks than before who are working in jurisdictions that you earlier did not have to deal with. And so in that spectrum, from a compliance perspective, I think about it in 4 buckets. There's a tax piece, Now, in the tax pieces, we can talk about these things on the U.S. state-to-state level, and then there's the whole international piece. Obviously, that's a lot more complicated. But on the U.S. State-to-state piece, the big pieces here are obviously trying to establish whether people working from a different jurisdiction, does that create nexus for the organization? In a lot of cases, not all companies have nexus in all 50 states. And so the presence of employees performing certain kind of work in other jurisdictions can create nexus-like risks. The same concept on an international level, right? Permanent establishment between countries where are employees performing work. And if you don't have a legal entity that is already registered and performing business there, then that can also create a lot of corporate tax issues. This can fundamentally impact the effective global corporate tax rate that the company is now having to pay. So the question becomes, how do you understand, who is where and what work they're performing? I think that's the question, Donna, that you also asked. Why are they going to be traveling? What work are they going to be performing? I think that continues to stay at the core of this issue. The other issue is in the payroll space, and this is specifically, very, very problematic here in the U.S. with the different states having different rules in terms of when non-residents need to be, when there's a corporate responsibility to start withholding on different employees' paychecks. That has been an issue that's been around forever. There are certain jurisdictions like New York, like California, who have been very aggressive on this in the past. I think New York's aggressiveness is not going away. Holly, can you put up the next slide? Maybe I can talk to the map there on the next slide. And so, New York and California have always been aggressive. New York has also something called a convenience rule, which I'm sure a number of folks on this call are familiar with. What New York's convenience rule says is that, hey, if you live in New Jersey, but your office is in New York, but you decide for your own convenience to continue to work from New Jersey, then, it is for your convenience. I, as New York, still need a piece of the action. So you should still be allocating that income to New York. Now, last year, there was a lot of hope that New York may actually let go of the convenience rule, because really people working from New Jersey were not working out of New Jersey out of their convenience, but rather they're working out of there because of the need from a pandemic perspective. Transit was closed, yet New York came back and basically said, we are going to impose the convenience rule, which means that during the pandemic, if you work from anywhere, New York is still going to try and claim that they should have been paid wage taxes on the time even that was spent outside of New York. And then there are other states. On this map you see a nice color coding. Obviously, the states that you see in gray, like the Washington, Nevada, Texas, Florida, Tennessee, New Hampshires of the world, these are states that don't have any income tax. So you don't have to worry about an employee who may have been in California but has now relocated to Texas, as long as you continue to withhold them in California for the full time, because Texas really is not going to ask for payroll taxes. Now, is that something that an employee would necessarily like? Very unlikely. They have moved to Texas for the reasons of tax, most likely. And so continuing to withhold them in California on their full year's income is going to be probably not something that goes well with the employee. And so there again comes the question that if somebody has moved to Texas and if you as an organization are okay for them to live in Texas, then what happens when they do come back to California and do come back to New York? And does that then, how will you understand who's spending how much time, what are the different rules in the different states, and hence who should be withheld when? This becomes more problematic when you have a large population that is now not going to be where you expected them to be. And the states have not made it any easy, right? So on this map, you see that the number of states that you see in the red, these are states that are either very unfriendly or quite unfriendly, because the threshold at which you have to start withholding as an organization is quite low. In many cases, it's day one. Other states that you see in green, they have varying different thresholds. So we don't have a uniform code across the country. A state like New York is 14 days, Illinois is 30 days, Arizona is 60 days, but then you have a California where it's basically, up to the minimum wage that somebody can earn. And so it comes by very, very quickly. So it's very complicated, it gets very messy, and that's one of the things that employers have to be thinking about, especially if they're allowing people to work remotely, if they're allowing people to work in a hybrid manner, especially if that hybrid happens to work across borders. On the next slide, I'm going to talk to you about some of the international risks. So, obviously there are a number of different pieces here. On the international, it's a lot more complicated. In the US, we talked about a state-to-state payroll withholding obligation, which is an employer obligation separate from the employee's obligation to pay the tax. When you think about outside the US, it becomes very complicated. We already talked about permanent establishment. Now, permanent establishment is a concept which is, quite complex. It has a number of different pieces that go into it before you can determine whether you want to declare a PE in a certain jurisdiction. But in some cases, you may have people who are operating in certain jurisdictions, performing activities, especially revenue generating activities that can create that obligation. A number of factors go into determining permanent establishment, things like if you have an office, if you have a bank account. In some countries, it's even if you have a phone number in those countries. But one of the aspects is people working in those jurisdictions and what they're doing. So a great example of this is in China. In China, you can be working in China and you can be working on a certain project. And if you had 5 people working on a project throughout the year, in any rolling 12-month period, if those 5 people collectively spent more than 183 days in China, then there's a very high risk that you may have to declare PE in China. And China's been very, very aggressive on this. They have, they have actually publicly published the companies that they have gone after and the amount of fines that they have imposed on those on companies, and those run into millions of dollars, both in fines and in penalties and interest, etc. So nothing to be taken lightly. Again, something that hopefully companies have a plan to monitor as we open up. Where are people going? How much time they're spending in different places? And what does that really mean from your corporate tax perspective? Similarly, on the payroll front, some of the issues that we talked about in the US between different states, those issues continue on the global scale. Obviously, you have double taxation treaties between countries which do permit certain activities from being exempt under certain conditions, from both employees becoming taxable as well as the withholding obligations to not to withhold an employee's paycheck on those double taxation treaties. However, in some countries, for example, between US and Canada, if you did have somebody who is going from US and spending time in Canada, then those thresholds are not that high. It's only 45 days in a calendar year and 90 days in a rolling 12-month period. But outside of that, there is still a filing obligation. So for example, in Canada, you have to file something called a T4 form that an employer basically says that I monitor where my employees do their work. I know that for my entire workforce, and here are the people that I know will be coming into Canada. Similar rules exist, for example, in UK. UK has something called the Appendix 4 reporting that we gotta put in with the pay system, the HMRC. And so in the absence of that, you may have to withhold on the employee's paycheck. If you file the Appendix 4, you may get away with not having to withhold on payroll, but you still have to do the filing. So a number of different considerations, a number of different things that are happening on the payroll front. Obviously, then the whole question becomes, when you do have somebody in another country, are you now running them on shadow payroll? Where are you continuing to pay them? That has other implications. So it starts to become very, very complicated very, very quickly. Then the third bucket is around the mobility folks. And, that picture always, is always very, very complicated. Mobility traditionally has dealt with assignees, whether they be long-term or short-term assignees, permanent assignments. But this is sort of a new version of mobility, the unstructured mobility, where you're not every company is going to put these folks on secondments or on assignments, because those are very, very expensive. So if I, as Nishant, wanted to go live in UK or my own volition, what is the stance that mobility is taking? Are these folks now on a transfer? If yes, then is the company going to make me whole on all the taxes that may be due in UK in addition to the taxes that I may need to pay in the US? Who's helping me with the relocation? What's happening with my visa and immigration? And so a lot of those things start to come into play. Obviously, the world is becoming more and more complicated. We're all trying to sort of close borders while at the same time employees wanting to break out of these borders. So, Brexit is a great example of this earlier this year, where UK folks who are in the UK, it was okay for them to just pick up and go work on continental Europe at any point in time. That's become a lot more complicated, right? If you're a UK passport holder, you really can't just go and work in France or Germany whenever you want anymore. You have restrictions in every 90-day period. You have to be looking at how many days you're spending in continental Europe. And it's very interesting and got very tricky because you may have spent a few weeks just vacationing in France, and then you may go on a business trip to Germany, but those days add up against the threshold of days that you can now spend in the EU countries. And so it starts to become very complicated. Historically, companies have not kept track of this, and your employees and both the employer can be at risk. Now you're talking about border control issues. You're talking about people getting stuck at borders. Repeat offenses will certainly result in massive fines for companies, and potentially companies even getting banned from doing business in those jurisdictions. So a lot to think about as the world opens up. These are things that we have not been used to doing in the last 15 to 18 months, but we'll certainly come back with a gush as we've seen travel come back unexpectedly, the volume of travel that we have seen come up. So those are just some of the things I'm hoping. There's obviously a lot of detail behind each of these things. My hope is that the audience will have a nice conversation here. So please do make use of the Q&A. If there's anything that you want to delve deeper into, let's talk about it, because otherwise I can keep talking about this topic, till tomorrow. And but let's get your questions answered. So please don't hesitate to put in your questions into the Q&A. Holly, next slide. Okay. So what does this mean? How do we address some of these things? Where do we even get started with this? I think one of the good things that have come out of the pandemic, if there's any good things, has been the fact that for the first time, I am seeing at different companies, different functions come together to try and work on this whole piece around, the mobile or the remote or the distributor, whatever we want to call it. The first time we've seen that, different, tax and payroll and travel and, HR and finance and IT, everybody's coming together. Most companies are forming committees of folks to try and figure out what does all of this mean. And I think that is a positive, because in the past, literally it was a hot potato, and, payroll would say, hey, tax, handle it. Tax would say, hey, it's not my job. Mobility, handle it. And mobility say, well, it's not my job. I'm take care of the assignees, so somebody in HR needs to, or finance. And so, but for the first time, I think, these groups of folks are coming together, which I think will result in, much better ways of understanding where people are spending time, what they're doing, who should be where, should they be there, right? It has implications, not just from a compliance perspective, from an expense perspective, from a duty of care perspective. And so I think that's a great thing. And what I'm seeing these companies do, or this new trend that I'm seeing, is that for the first time, this is a priority. Somebody at the CHRO level or the CFO level, most likely CHRO level, is owning this and really driving it, because it is becoming a strategic priority. This is no longer just about compliance. This is about talent retention. This is about talent attraction. If you as a company are not offering, the flexibility in work, are you going to continue to remain competitive in the marketplace? The answer for some industries may be yes. A lot of people in finance believe yes, because, hey, Morgan Stanley is saying come back to work, and Goldman Sachs is saying, JP Morgan, Jamie Dimon doesn't like it as much, but he's saying that's up, that I like to be able to see people back at work. But in most other industries, I think you're going to have a number of people who can work from home, wanting that flexibility to work from home. And so it's becoming a priority, because this is beyond compliance. This is about talent and talent acquisition, talent retention. And so that's the first piece. To the extent that your organization has not already prioritized it, which I would find very hard to believe, then make sure that this topic is being prioritized. Make sure that you have the right people on the table. It's an interdisciplinary cross-disciplinary issue, and so make sure that you have the right people on the table. Having said that, make sure that there is an owner of the process, because otherwise, you might get 100 stings by committee and never get to a decision. I have also seen that at several of the companies that I interact with and that I work with. So that's the first piece. The second piece is around policy and process, and you heard Donna say the same thing. Policy and process, again, will cut across each and every piece, whether it's around who should travel and why they should travel and how much they should spend on their travel budgets, etc., all the way to what does it mean from a compliance perspective. Are we okay for people to work outside the US? Are we okay for people to work outside the state? Do they need to be in a commutable distance? How many days can they or can they not be out of the office? I think the important piece, and I think this is an obvious one, right? But I think the important piece that I'm seeing as companies rush to build these policies, to go live in fall. Most companies are planning to go live in fall. What I'm seeing is the exception piece. I think most companies are not thinking about how to handle exceptions. Okay, John Doe, you can work out of anywhere you want for 20 days, but you have to be back in 20 days because, we have defined 30 days as that limit for the high risk. But then my mom falls sick and I can't come back and I want an extension for 2 weeks. How do you handle that? Right. So I think there's going to be a lot of those kinds of issues. A lot of people have not renewed their passports in a while. They don't realize they go and they find they're in another country and they now don't have enough pages or don't have enough expiration left, right? And so now they're stuck in that country. So how are you going to handle all these exceptions? And I think that's the very, very important part of policy and process development. In fact, with policy and process development, this slide should probably be updated to say communication. I think Donna talked about this. Communication is going to be key here because, people are, otherwise, in the last 15 to 18 months, most companies have operated, we've all been trying to catch up. And so employees have become very used to just doing what they want to do. And so to get them back on track is going to require very effective communication that has buy-in from the top level, which is communicated from the top level and make sure that right training is being done. Then the third piece of this is going to be technology. If you were a 1,000 people company and you only had 50 to 70 people who are on the road at any given point in time, who are traveling significantly, no big deal. But once you start to have 100, 200, 500 people who are now not working where you expect them to be working, which is in their office, that is a problem. How do you keep track? We've been talking about this. How do you know who is working? Where are they working? What are they doing? If you expected them to be back, are they back or are they still there? Are they raising their hand to let you know that they want to be going and working from somewhere else? All of this, of course, you can do with a mailbox. I do have a client in the beginning of pandemic. They set up the 6,000 people company. The beginning of pandemic, they set up a mailbox. Hey, anybody who wanted to go work from anywhere else, just send us an email. And they have had 1,000 emails over the last year, and it's been impossible for them to manage. And so I think Excel and emails are great tools. We obviously use them every day, but it is going to be virtually impossible to manage the volume and the workflows that come with managing people who are working across borders. And so technology solution is definitely a very, very critical part in making sure that you're moving towards compliance. And then I don't think that this is a one and done. I don't think that you form a policy, you communicate it out, you get a tool, you give it to people, and you're done. I think this is going to require ongoing monitoring. As I said, if somebody said that they're going to be back in 20 days from Canada, are they actually back? How do you monitor those kinds of things? And then also reprioritizing and making sure that it's being continuously recommunicated that this is something that is critical, this is important. It's a right that employees have. They're being given the flexibility to work from wherever they want. But that comes with certain responsibilities because as an organization, compliance is typically not an option. And sometimes it can become extremely, extremely expensive, both for the employee as well as from the employer. So those are the basic facets, at least as we've been working with companies that we see. With that, I wanted to leave a good 20, 25 minutes here to be able to answer any questions that folks in the audience might have. So please don't hesitate. The Q&A window is open. please feel free to ask your questions. But in the meantime, I already have a question that has come in. And Donna, it looks like this is for you. I think somewhere in your talk you mentioned that your research team is working on pieces around new developments. Can you elaborate on that? What can you share some of those new developments that you were talking about?
Yeah, absolutely. Happy to. Gosh, I learned so much during your session there. You're right. It's very complicated. As we get back out there, there's so many things to consider. And, I mentioned earlier our research and innovation team, and their role is to really keep a pulse on what are the hot topics out there, what are the things that our customers have to think about, and to provide some guidance and best practice around all of that. So some of the things that we're watching really closely kind of tie nicely, Nishant, to what you were talking about. I know one of the pieces they're working on is around digital nomads. And that's your hybrid workers. That's we saw throughout the last year increased office closures, which, kind of tie back to, again, what you were saying with the number of people that are working remotely and working, in these hybrid fashions and kind of balancing that with the value of getting together face to face. So I know that's one of the areas they're working on. They're also putting together a report on the EU digital health certificates, another big topic, and the track and trace apps that are in the marketplace, and also cybersecurity, which is top of mind regardless if you're in travel or anything else. So some key pieces that they'll be putting out over the next few months.
Okay, that's great. Sounds like a lot is coming out. Maybe we need to bring you back for another conversation and you have some of those pieces. I'd love to hear what you've learned. So thank you for sharing that. I have another question here. Any special tax compliance considerations for commuter arrangements? So yes, there are some special tax considerations. Obviously, it depends on the jurisdiction that we're talking about here, Pat. But to the extent, for example, if you have commuters who are going between different states, right? And we sometimes forget that, a lot of companies tend to be based very close to borders. Obviously, in the tri-state area, for example, it's very easy to be commuting from a Connecticut or a New Jersey into New York. You've got the same thing happening in the, Maryland, Virginia, DC. So many corridors in the U.S. where you have people who may be living across borders, right? So now, depending on the jurisdictions that we're talking about, in some cases, when you have commuters who are across borders, states may have what is called reciprocity arrangements. So, for example, New Jersey and Pennsylvania have a reciprocity arrangement. So if you have a business that's set up in Pennsylvania, but you have an employee who lives in New Jersey, and they go into Pennsylvania, you can actually file a form with the Pennsylvania authorities. I forget the name of the form, but if you send me an email, I can tell you what it is. Then that New Jersey resident does not have to be withheld in Pennsylvania. But that is not true across all jurisdictions. I already talked about New York, California. There are a number of states in the U.S. who do not have such reciprocity arrangements. In fact, they're imposing what is called, there are 7 states in the U.S. that impose something called a convenience rule, where if you work out of that state, even if you're commuting from a different state, you have to think about where should that payroll really be withheld. So yes, there are absolutely commuter considerations. This is just on the state-to-state level. Similarly, there are certain considerations to be thought about on the local level, especially when you think about states like Ohio, Indiana, Pennsylvania, where you have local taxes. There can be some implications there as well. And then lastly, one of the things that we talk about, is obviously compliance when it relates to some of the tax pieces and people working remotely or commuting from other places. But there are also savings opportunities. We don't talk as much about the savings opportunities, which are really cool. So for example, in San Francisco has something called a GRT, a gross receipts tax. It's sort of a form of a payroll tax, similar to what Seattle is now putting in place with Jumpstart. And my hypothesis is that there are a number of different jurisdictions, local jurisdictions across the country that are going to put in these kinds of taxes, like the Seattle Jumpstart, I think Oakland is considering something similar. LA already has something. Philly has something. San Francisco has a GRT. New York City has an unincorporated business tax, which does not apply to obviously incorporated companies, but to the extent that you're an LLC or any other kind of partnership, it will apply to you. So in many of these taxes, like the San Francisco GRT I was talking about, if you have an employee who was otherwise working out of New York, out of San Francisco, but now has decided they're not going to be coming into San Francisco for, 3 days out of the week, then you have the opportunity to save on the GRT, because the GRT said that GRT will, because GRT basically allows you to be able to allocate the wages that are the work that is not performed in San Francisco to be excluded from that calculation of GRT. We have a company, it's a fairly large company, they're a $2 billion revenue company, but they're going to be saving upwards of $10 million in GRT over the last year, because they have a number of people who have not just been working in San Francisco, they've been working out of the Bay, or been working out of, moved to Texas, or working out of Napa, or wherever they're working out of. And so it's important to obviously remember the compliance issues, but also there are tax saving opportunities as it relates to commuters that should be looked at, and happy to discuss that more if anybody has any questions. And then, I also got a note in chat that, yes, the Supreme Court, I think it was yesterday or day before, hard to keep track of time, just threw out the whole New Hampshire lawsuit against Massachusetts for remote workers residing in New Hampshire. So Massachusetts will assess tax on New Hampshire residents who are normally based in Massachusetts. And so I think we're going to see some implications of this in days and months to come. So there's not going to be any dull moments as it relates to people working across borders. But thank you for sharing that. Okay, let's see if there are other questions. Donna, one question that I'm seeing here for you is, in terms of the travel itself, are you seeing at BCD travel, business travel, pick up more domestically or more internationally? Domestic for sure.
Again, with the pace of vaccines in different regions and the easing of lockdowns, the domestic footprint has definitely picked up. In fact, it's accelerated here recently. There's a lot of, I think, gosh, every hour I get a new alert across my computer that talks about a new restriction being lifted, in various parts of the world and different things being opened up. So I do think that we'll start seeing a little bit of an uptick in the international later this year. But for now, we saw a quick jump domestically, and we expect to, see that continue to grow this year.
You don't think the whole Delta thing throws anything? You think that does not impact anything? What's your
the numbers aren't showing it, and having conversations with customers, I think everybody is hoping for the best and planning for their offices to reopen and for their travelers to get back out there. But I do think that companies have a unique opportunity right now. I mean, we have employees' ears, so it's so important that we talk to them about what's allowed and, more importantly, why. And they definitely need to be prepared as they're getting back out on the road to use their resources. I mean, we're on information overload, but there are some clear resources to be able to, really assess your situation, where you're leaving from, where you're going to, what's expected, what's the lay of the land, how many people have been vaccinated, when did things get lifted. So information is power at this given point. And I do think that, again, we have our employees' ears, and we need to make sure that they're hearing from us and they know what we're expecting of them as they prepare to get back out there.
Yep, that makes sense. All right, I have a question here about Schengen and Brexit. I think this is a new topic. A lot of folks are thinking about this, and the question is, can you say more about how has Brexit impacted travel of folks across different jurisdictions? So I think from obviously this is a very, very deep topic, and there are a number of different changes that have happened with respect to the free movement of money, trade, and people across the borders in EU. The biggest things that I have seen are twofold as it relates to employees who are going to be working across different jurisdictions. The one is, as I mentioned before, there isn't as much free flow of people that can happen from UK to the rest of EU plus. There are now rules around how much time, what kind of activities that those people can perform in EU plus, and also the amount of time that people can spend. So where in a previous world you just get up and go, now there needs to be an assessment to understand whether the activities you're going to be performing is going to require a work permit or not. And if the answer is yes, then obviously you have to get a work permit, and that can be quite a time-consuming and costly and a costly affair. What that does is that from a business perspective, you can't just pick up and go, right? You got to plan more than you could have before. For those people who are just performing regular business and not, activities that may require work permit, just doing business travel. For those folks, there is now a constraint that they cannot spend more than 90 days in the last 6 months. So in an 180-day period, you can only be in EU plus for 90 days. And the way that 90 days, the 90 days itself needs to be unpacked, but we're not going to get into all the details here. Happy to answer any questions separately if anybody wants to reach out. But the 90 days has two things that I think at least have caught my attention. One is that the 90 days is not in a single country in EU plus countries. So you could spend 30 days in France and 20 days, 30 days in France, 50 days in Germany, and then you only have 10 days remaining to spend in any of the EU plus countries. So it's sort of actually blocked, not as a single country. That's one piece. The second piece that I think I mentioned briefly before is the fact that you're not only going to have the days that are going to be work days that are going to be counted towards that 90 days, but all weekends and all personal days. So if you are in France for 2-week vacation, those 14 days are being counted towards that 90 days. And I think a lot of employers and employees are going to get tripped up by that. So that's one piece of it, and that obviously impacts immigration. As I said before, to the extent that there's an employer that's a repeat offender, there are big penalties, but also this big sword around, hey, we may just ban you from doing economic activity in the country. So that's something just to think about, to the extent that as an organization you haven't started to think about it, something to think about. Obviously, no travel happening in Europe right now, but it is certainly coming, as Donna mentioned. Donna, I have a question for you here. So, that beautiful chart that you had, back to travel. There's a lot going on in that chart. So the question that's come in, I think it sort of relates to that chart. The question is, how do we balance this? How do we balance between the different constraints that may be put on an employee as a result? So there is a complicated cycle that you showed there. So obviously, getting people to evaluate before they travel, et cetera, now puts a burden of employees. And then also there's the convenience of the employees. Employees are not used to traveling. This all seems very burdensome. So that's what the question is getting at. How do you recommend employers balance these two things?
Yeah, I mean, I think it definitely starts with the policy component of all of it, and just really, you kind of have to look at your organization and understand why my people travel. So what is the purpose of the trip? And there's going to be a certain component of what you do as an organization that requires your people to be on the road. And then there's, the other component where, you might have to incorporate in some, virtual guidelines for them to follow. But I think that it starts with really understanding the make of why my people travel in the first place. And once I understand that, then it shifts to, do I have the right suppliers? Do I have the right policies in place to make sure that my people are safe on the road, that this is cost contained, and that the traveler wellness component comes into all of it. So I think it starts there. It starts with policy, but then it got, you were mentioning it earlier on one of your slides, how important reporting is. Like, you need to know what are my people doing? What is my compliance? And what are the, the benefits of having that compliance? And then what are the consequences of not having that compliance? And I think that, once you really understand those components, then it's easy to communicate to your employees, again, what's allowed and why it's important. And that takes you back to those pieces. And if you have that relationship with your employees, then I think as they're getting back out on the road, it makes sense what you're expecting of them, how you're taking care of them while they're out on the road by monitoring their risk, by monitoring their reporting and those components. I hope that answers your question.
That was great. Thank you for sharing that, Donna. The next question here, I guess I will take, it asks, I guess it's a follow-up to something that I said, which is, once people have, are spending time in a certain place, and let's say they were only going to be there for 20 days, but how do you really know that they came back after the 20 days? How are we actually keeping track of people? So the question is, what mechanisms have you seen companies use to monitor the location of their employees? And so I can take that one. So, obviously technology comes very handy here. I've helped a number of different companies understand the various ways that they can think about how to understand the employee footprint. Obviously, it's not an easy question. There is a number of privacy aspects to it, which are non-trivial. Having said that, there is enough technology that exists out there to have a solution for almost any kind of company. And I normally think about these in two buckets. I think of one bucket being what I call the passive data sources, and then the second bucket, what I call the active data sources. The way I think about the passive data sources are those pieces of information that already live inside an organization's enterprise system. So think about travel and expense data, right? So we're talking to BCD right now. When people book flights, you know when they're going, when they're supposed to come back, and you can set up automated reminders to ask them, hey, did you actually come back, right? So that's one way of monitoring. This is information that already lives inside your enterprise system. BCD has made that booking for you, and so you already know when is that person leaving and when they're supposed to come back. Similarly, there are other pieces of passive information, for example, VPN. All IT departments these days log the IP address from which you're logging in, and those IP addresses can be reverse geocoded to figure out where employees are spending time. So there are a number of such data sources that are available. You don't have to use just any one data source. You can combine a lot of these data sources. You can combine a badge swipe with a travel booking, with an expense report, with a VPN, and try and form as full a picture of what the employee footprint may look like. Now, is it perfect? It's not perfect, but it is significantly better than what most companies do today, which is, have no visibility. So that's one way of doing things. It is great from a privacy perspective because you already have that data, so you don't need to go and necessarily, fight any privacy battles here. But the data quality does tend to be, you're trading off some data quality issues there. On the other hand, you may have an active data source, and a number of companies we work with also use both passive as well as active data sources. And the one that I've found most successful with the companies that we've worked with is actually a laptop application. So for example, we have a widget that we can deploy on company-issued laptops. It's like a LoJack. And it does what you expect it to do. It basically knows where the asset is, where the laptop is. And it reports that information at a jurisdiction level. So it's in the UK, it's in France, it's in India, it's in China, or it's in New York, state of New York, or it's in the state of California. And so it sort of does a great job of balancing that privacy aspect with getting near real-time information. There's some lag that's built in for security reasons, but it's near real-time. It's within 24 hours, what the footprint of employees looks like. And so, if touch wood, if something like another pandemic hit, then you're actually able to pull up and have a pretty good view into where your people are. And that same thing can be used for monitoring. Hey, if you approved somebody to be in another state, another country for 20 days, you can get an alert if they are now have exceeded that 20-day threshold, and that can be a very effective way of monitoring, at least starting that discussion on whether they need to come back or they need further assistance so that they don't become ghost expats or, just inevitably end up triggering thresholds that the company may not be comfortable with. Okay, so that is all the questions that we have from the audience. Donna, did you have anything else that you'd like to add here in the last few minutes?
No, I think I'm good. Again, I just can't emphasize enough how we have this unique opportunity to be in front of our people. And so whether it's travel policy or this virtual policy or the traveling components, it's a great time to reinforce what's allowed and why. And yeah, that's it. I've enjoyed the session. I've learned a lot. Thank you so much, Nishant and Holly, for arranging. It's been great.